Last week, I posted videos of almost all the stocks that reported earnings that I like or already own, but because there were a lot of them, I missed 3, which I will do this week. Today, I will talk about Airbnb. On Wednesday, I'll talk about Shift earnings, and on Friday, Tattoo Chef. But if I'm missing any other, please let me know in the comment section below. Hello everyone, welcome back to the channel. If you're new to my channel, consider subscribing and smashing that like button since it really helps the channel out with the algorithm. Also, I have a completely free Discord group chat, which for that is down in the description below. I think Airbnb needs no introduction. I assume everyone know what it is. If not, let me know in the comment section. I do have to say that I don't own any Airbnb shares yet, and you guys are going to see why. Well, let's start with their shareholders letter. In summary, Nights and Experience booked total $64.4 million, is an increase of 13% year over year, as they have seen domestic travel increase, nearby travel and long-term stays in North America as well. Then their gross booking value was $10.3 billion, which is an excellent growth of 52% year over year, and total revenue of $887 million for Q1, which is only an increase of 5%. I want to say something very important, which obviously when we see an increase of only 5% for such company like Airbnb, which is a disruptive company with huge potential, seems kind of weird, but it actually is incredible in my opinion, because just think about this. The pandemic has not affected the US that much in Q1 2020, but started very hard in Q2, Q3, and Q4. So we seeing Airbnb grow 5% during the pandemic, surpassing pre-COVID levels, is actually incredible since it demonstrates a rebound that the company have had in the past quarter. Now, their net loss was actually wider than expected since they reported $1.17 billion in net loss, and obviously that sounds horrible, but this number includes $377 million in loss related to repayment of debt, $292 million in non-cash mark-to adjustments for warrants, and $113 million in expenses related to a lease no longer seem necessary. So it will be more interesting to see actually their Ebitda, since net losses include several factors affecting their net loss that might not be there in Q2, and their Ebitda is basically what they have been doing operational speaking from their business, which has actually improved massively. They reported negative $59 million, which improved due to improvements in variable costs, materially increased marketing efficiency, and management of fixed costs. As you can see, it has actually decreased massively from negative $334 million last year to negative $59 million, which means that they are getting closer and closer to profitability every single time. Obviously, they still have a long path to achieve profitability, but they are getting there. In this chart, we can see that Nights and Experience booked actually increased 13% as mentioned before, while their gross booking value per night and Experience booked increased 35% over year, which impressed me because apparently Q1 and Q2 tends to be slow in this segment. But this demonstrates that revenue ended up being higher because rates increased as well, and not because they saw a huge increase in people taking domestic trips, which is normal during a pandemic, but still demonstrates the rebound that the business have had. We already talked about their revenue, but their cost of revenue for Q1 declined by 9% year over year to $254 million, which according to them, it was because of lower infrastructure spend and many things that they were able to improve with time. Operations and support also increased 16%. Their product and development did increase 40%, which is huge. Then their sales and marketing decreased 28%, and general and administrative increased 107%, which again looks awful because their total costs and expenses increased to $1.3 billion from $1.16 billion. But do you see that one in the almost every expenses? That means stock compensation, and just see that they actually had $229.4 million in stock compensations, most of it going to product development. So without stock compensation, operations and support actually decreased 21%, product development 7%, sales and marketing 37%, and general administrative 78%. But then we see that they said that in general administrative, they had $82 million reduction in their reserve for lodging taxes in jurisdiction in which they no longer believed a liability was probable following a favorable outcome in a related legal proceeding. So without stock-based compensation and reversal in 2020, general administrative decreased 13%. Just trying to show you guys how different everything seems after noticing that they spent a lot of money in stock-based compensation. During their earnings call, they mentioned that they are noticing how people are really ready to travel. They have noticed the volume increasing lately, and even more as the UK announced plans to exit lockdown in February, France easing traveling restrictions in May, the CDC saying that fully vaccinated people could start doing things that they stopped doing because of the pandemic, and obviously one of the most things people have been looking for is to start traveling. They will now feel more comfortable with traveling with the vaccine. Also, the pandemic has shown us that we don't need to tether in a location to live and work, as most people are still working from home, and most people will now have more flexibility from now and then about where and when they travel. That is why Airbnb noticed that guests aren't just traveling on Airbnb, they're actually living on Airbnbs, as 24% of their nights booked were long-term stays, up from 14%, which I think it's huge since it confirms that many people are working remotely and are able to travel more, rent a place for a month or two, work during the day, and visit new places during the night and weekends, or at least that is what I would do and what I have seen in many people. Now, they also talked about a marketing campaign that they have been doing in order to attract more hosts and be able to have more availability for a possible summer without face masks and COVID. Apparently, it is working and they are receiving a lot of more visitors, more people making their first booking ever, and more volume in their website. And something that caught my attention and think it will be incredible for them is their newest feature called Flexible Date. They explain that this helps them to point the demand to where they have availability, which I think it is incredible because if people certainly start leaving places in different cities every year while working remotely and someone wants to move, let's say, to Miami during June and July, Airbnb could recommend people saying, hey, maybe if you could go in October and September, it will be cheaper because, well, maybe because Miami will be full during summer, there is way more demand, which means that rates are higher. And for someone that is looking to live in a place for a month or two while working remotely, this might be an excellent feature, and according to them, it has worked very well already. Now, why I did not invest in their IPO, even though I did want to? Because to be honest, I love their business model. I see a lot of potential, and the pandemic showed me that their business model was able to rebound way faster than hotels, as people felt more comfortable staying in a private house or apartment instead of staying in a hotel with a bunch of people in the elevator or a dining room, for example. But their valuation did not make sense to me, and I still think that it is a bit expensive right now. Airbnb is trading at $141.2 per share with a market cap of a whopping $87 billion and a price to sales ratio of 25.81. Let's say that they report a total revenue of $5.17 billion this year, as analysts are expecting a 53% growth. A valuation of $87 billion still does not make sense to me. If we take a look at their competitors, Expedia has a market cap of $25.25 billion and a price to sales ratio of 5.96, and Bookings has a valuation of $93.7 billion with a price to sales ratio of 16.59. With this, I'm not saying that Airbnb stock will not go up. No, it is just that their valuation does not make sense to me, but I do see why many people is interested in this company. Their business has rebounded very nicely during the pandemic in comparison to hotels and other competitors. Maybe it is just because of higher rates, just like CNBC said, but still show that people preferred Airbnb over anything else. I do believe they will continue seeing excellent growth year over year, way more after the pandemic, and that is why why I do want to invest in this company in the long term, but not yet. I think it is overvalued at the moment, even though I love their business and see potential in it for the long term. But I prefer to wait a little bit more. So if you like this video, please consider subscribing and smashing that like button since it really helps the channel out. Thank you and see you next time.